I started my career at Sanders Capital, which at the time was based in New York City. When I first started investing in Bitcoin and stablecoins, which I think is really the area that I expect the most parabolic growth over the next few years.
What is your typical check size?
I'll average about 2 million. If you don't want to be invested with me, I don't want you to be. You can take your money. I think in the next, again, 3 to 5 years, people will be able to use stablecoins for daily transactions like buying coffee and
Hello and welcome, and we're here at Holistic Investments, and I'm your host, Konstantin Kogan, and I'm delighted to have an amazing guest today, Rennick Palley, who's a founding partner in Stratos. Hi, Rennick.
Hi, thanks for having me.
Listen, I know that we've been planning it for some time, and really appreciate that you replied so fast. Like I've seen your portfolio. I think what you guys are doing is amazing because it's a hybrid model between the venture capital and the liquid investment, right? So excited to talk about this. As a tradition, right, we have to throw a legal disclaimer that this content is for informational purposes only, and you should not construe any such information or other material as legal, tax, investment, financial, or any other advice. So now, now we can talk literally about anything. But I want to start with you, Rennick. I know that before starting crypto, you've been running like pretty successful career. You've been in Sanders Capital, and it's a huge $75 billion global equity management fund. I mean, you've been into quantitative analysis, like an investment, traditional investment. So maybe you can help us to understand what actually made you excited about Web3.
Sure. Um, yeah, so as you mentioned, I started my career at Sanders Capital, which at the time was based in New York City. They've since moved to Palm Beach during COVID, like many others. And I was very fortunate to get hired there out of grad school. I got a master's in quantitative finance at MIT and um, was able to convince the founder of Sanders to hire me. It was very fortunate because he is very well regarded in the investment community. He has probably one of the best performance track records over a multi-decade period on Wall Street. He's up there with some of the best investors of all time. So I learned to invest from him and the strategy. There was only 10 investment professionals at the firm at the time when I was there. So I basically worked with him day to day. And so to learn how he viewed the world and the things that he thought were important for making investment decisions. And, obviously when I started there, I was in my early 20s. I didn't know anything. And, there wasn't any training, so to speak. It was just, I would present some research and get his feedback. And usually at the beginning, that feedback resulted in disappointment. And then I learned how to anticipate what his questions were going to be, and then developed my own process based on basically having his voice in my head. So that was sort of the beginning of my investment career. And while I was there, it occurred to me that this was in 2014, that technology was going to be the major driver of GDP growth, just given demographics globally at the time. And, that to a large degree has played out, particularly in developed markets in the US. And that's what got me interested in crypto and Ethereum at the time. Fast forward a couple years, and I was looking at the potential for essentially Southeast Asian banks as basically they at the time were projecting significant growth because the majority of the populations in those countries didn't have bank accounts at all. They were just basically living, you know, cash in hand, or on a barter system even. So it was very primitive, and they were expecting to be able to uh, bank, a significant population. And I was a bit skeptical that that would happen because typically in emerging markets countries, you sort of leapfrog technologies. You don't necessarily progress in the same order of things that maybe developed economies had 50 years prior. And so, at the time, smartphone adoption was in its vertical S curve. Now, obviously, there are more smartphones in the world than there are people. So that has played out. And so I wanted to understand what other types of technologies might exist that could potentially disintermediate the banks. And that's when I really started getting into Bitcoin, Ethereum, and the rest of it. Um, there was another element there, which was just the view that going back to demographics, there was so much debt in the world, and the only way to service that debt was going to be to inflate out of it. And so, looking at at things like gold and stores of value, and then ultimately Bitcoin, and kind of saying like, look, this is the most asymmetric bet that exists, as a hedge against inflation and money printing. Little did I know at the time that we would print 40% of the outstanding monetary base in 1 year during COVID, and it seems like that's only going to continue. So I think there are kind of two areas of interest that got me into crypto. So happy to talk about both of those in more detail because I think they are both very relevant still today.
Yeah, so basically monetary inefficiency and monetary policy, the revolution, the technological revolution that which you've seen that is advancing and it's like you cannot stop it anymore. Like the Ethereum, which will I guess you got to actually full in around 2016, right? I assume, right?
Yes, yes. I couldn't convince Sanders to get involved in crypto,
Hmm.
and I just felt that it was such an amazing opportunity that I just had to go and do it myself.
Now, why do you think you failed in convincing such an iconic investor? Like, if you're going to be completely honest about it.
So I think one of the things that makes him a really great investor is being highly disciplined.
Hmm.
And he has a specific area of focus, which is global equities, looking at them from a statistical value lens, which is to say, can I buy something that's generating earnings at 15 times earnings or less, or can I project that the earnings are going to grow to that level in a relatively short time period? And if it doesn't fit within that box, he wasn't really interested in doing it.
Hmm.
There was, a hedge fund strategy where we would do things like credit and currencies and things like that, but that was not really the primary focus. So I can understand as I've matured as an investor myself, I actually can understand why he didn't go there. Um, but I also think that he is old school, and traditionally you didn't have the same kind of highly asymmetric, network affected investment opportunities in prior decades that you have today because of the internet, basically. The Mag 7 and crypto are the two things that are probably the best examples of globally scalable, zero marginal cost businesses. And historically, those just didn't really exist. And so to underwrite asymmetry to the upside really generally was not a good bet until the internet came along. So again, I can understand where he's coming from there. I think you sort of have to be of a different generation to identify those opportunities early.
Hmm. True. And now you've mentioned that with more smartphones are coming into the emerging markets, and we're gonna see probably in the coming 5 years, these numbers are gonna like quadruple, right? And because everything is happening faster and like the economy is moving, like the phones are becoming more available. What do you foresee, like, is going to happen with crypto advancement? Because we're still being criticized that the adoption is very slow. There's about 560 million wallets in the world. And out of those 560 million, like, even if you talk about, like, let's say DeFi, less than 10 million are actively using it, right? So it's still incredibly low penetration if we are talking about the global scale. So what do you think is missing and what do you foresee needs to be happening in the world so that those numbers will grow?
Yeah. So one thing that I would say is that the smartphone adoption process has already occurred. I don't expect the number of smartphones to increase significantly going forward. Like I said earlier, there's already more than one smartphone per person on Earth.
Mhm.
Very few people need more than one. So, it's going to basically trend with population growth. Obviously, there's a refresh cycle where people get a new one every 1 to 2 years, but the total net installed base of phones is not going to increase that much. So, the underlying infrastructure for crypto to penetrate already exists. It's not like we have to wait for the phones to, get distributed like we did maybe 10 years ago.
Mhm.
In terms of adoption, I actually think that if you look at the adoption curve of Bitcoin relative to the internet, and you look at when both of them began, which, Bitcoin obviously was 2009 and the internet was, really the early 90s, we're actually tracking very well in terms of adoption. And so I think that it's largely a misnomer that people think that crypto is not being adopted. I think you can argue that Web3, which is like a subset of crypto, maybe hasn't seen the adoption that people had anticipated. And we can talk about that. But I think Bitcoin, if you were to say 15 years, 16 years into it, the president of the United States talking about it, Bitcoin backed lobby groups were able to really sway the election. People are basically looking at it as an alternative to gold. I would say the adoption there is actually phenomenal. When I first started investing in Bitcoin, that would have been I wouldn't have barely believed you. I would have said that is the best possible uh, parallel universe that could have played out for Bitcoin. That in 2025 we would be honestly having these conversations and speculating about a strategic reserve in the United States. Um, so then there's the other side of crypto, which is, the smart contract platforms, Ethereum, Solana, the rest of the L1s and everything that exists on them. I actually think that the adoption there is pretty strong as well. I would just say that it may not be the adoption that people want yet. So I think the product market fit for crypto in speculation is phenomenal and only growing. If you talk to anyone who trades actively, they're almost always also engaged in trading in crypto. And so as a product market fit for being able to trade 24/7 and participate in extremely high vol assets, I think it's pretty good. And I think that's only going to grow, especially when you integrate AI and people being able to build trading bots and have AI make trading decisions for them. I think crypto is just better suited for that. Um, and so that's going to continue to drive adoption. And then you've got stable coins, which I think is really the area that I expect the most parabolic growth over the next few years, and we can get into that. And then you've got Web3, which is gaming, music, NFTs, data management, social, that whole tale of things.
Mhm.
Um, I think that we will ultimately see adoption there as well, but I think that comes last from the other two things. I think the infrastructure, the L1 technology is not quite there yet. Um, I think that the natural adoption curve of most technologies is to start with things like speculation to build out the installed base and then create uh, user experiences that are sufficient for broader adoption. Everything from railroads to the internet kind of started with these sorts of things and then eventually took time for the average person to start using them. So I think that will happen, but it's not something that I'm immediately expecting to occur.
I hear you. I'm actually sharing your enthusiasm on stablecoins, so we can talk about it separately, right? But before that, I just want to also realize, so we're here in the, I would say Q1 2025, right? I was reading your research paper on the just activity, venture capital activity on Q4 2024. And it says that as a we see like a slight decline in venture funding, specifically in Series A stage. However, like we still saw like the top token that launched, they had about $9 billion market cap. So on the one hand, there are a lot of like positive news coming out, right? We probably have the most pro-crypto and I would say crypto-friendly government in the history of the United States. Now, that also impacted by macroeconomical trade wars, tariffs, etc. So it kind of those news, unfortunately, they're not like giving us as much excitement, and the global markets are not reacting as such, right? So what do you think, why do you think right now, like given all the enthusiasm that we should be having as an industry, why not more, like not so many deals are being funded?
Um, yeah, I think it's a combination of things. First of all, the number of venture deals that get done is highly correlated to the amount of venture capital that gets raised by funds, and it lags. So typically, like if you look at the last cycle, the best quarter for raising venture capital funds, not necessarily deploying them, but for raising them, was Q1 2022. So
Mm,
after the peak. Um, so I wouldn't expect basically the capital that's being deployed now was actually being raised largely in the bear market. That's one thing. The second thing is if you look at how much capital that was deployed in the last cycle, 2021 and 2022 specifically, um, that amount of capital was substantial. It was, way above what you would have expected, sort of like the, you know, expected capital raising curve over time that you would have expected for crypto because of the amount of money that got printed in that time and just the general euphoria around risk assets as a result.
hmm
Um, and so the flip side of that is when you have too much capital chasing too few good deals, and then some of the issues that we're seeing on the liquid token side that we can get into, you have fairly disappointing venture returns.
mm
Most funds are barely above water from 2021, 2022 era because they were investing too much money at too high valuations in deals that haven't really panned out. And so I think a lot of venture investors are licking their wounds from that and are not as excited to be deploying right now. I think some of them just haven't been successful in raising follow-on funds, so there are just fewer participants in the market. I think we're actually on our way to a broader extinction event in crypto venture, which we can talk about. Um, and then, again, another follow on to that is yes, there has been a lot of tokens launched and they represent a significant amount of money, but it's still a fairly small amount relative to the amount that was deployed. So it does show if you compare that to the IPO market and traditional finance, for example, there has been much more new issuance activity from venture backed companies in crypto than there has been in TradFi, which I think is actually a predictor of what we're going to see in the future, where pretty much every company, whether it's a crypto company or not, ultimately goes to launch a token as opposed to listing equity. And I think those worlds will sort of merge, um, which we can talk about more as well.
Well, you mentioned something very, I would say, controversial about the extinction of some of the VCs. I want to hear more about it. What do you mean by that?
Yeah, so if you think about what the objective of a venture capital fund is from an LP's perspective, it's to generate something like 3x net over an 8 to 10 year life, which equates to a high teens, 16, 17% annualized compound growth rate, or IRR. If you're not generating returns that are at that level, you start to become the venture investments start to become unattractive on a relative basis. Especially when you consider the fact that you're locked up in illiquid for 8 to 10 years,
Hmm.
and it's really only the top quartile of funds that generate that level of return. And there is huge dispersion around outcomes, and many funds don't end up even returning the capital that people invest in them. So compare that to the realized returns of the Nasdaq over the last 10 years, which were in the high teens annualized, completely liquid, highly scalable. You could invest billions of dollars in the Nasdaq, whereas you can only invest 50 to $100 million in the best venture funds, and even then, possibly a lot less than that. So if you think about the largest LPs, they start to say, you know what, I don't think this really pencils, because
Hmm.
everyone looks at trailing returns, even though trailing returns generally are not the best predictor of future returns, unless there's something structural there. I think they're looking at it and saying, net net, we're only going to invest going forward in the absolute best crypto venture funds, and those that have generated multiples on their fund already have generated substantial DPI back to the LPs. And then you look at what's happening in alts. Alts have, I would say, for the most part, decoupled from Bitcoin. Bitcoin is really being viewed as a global macro asset, whereas most alts are frankly trash, and they're trading that way. And smart investors say, okay, if I invest in this crypto venture fund, where's my exit liquidity? And the alts market is to a large degree broken. And so it's hard to understand where that 3x is going to come from, especially if you look at the recent returns. And so I think only the strongest will end up surviving and raising follow-on funds. And as a result, there will be much fewer crypto venture investors in the space going forward.
This is a very interesting opinion, so I want to pick your brain a little bit more about it. So first of all, for someone who's watching this video, and they already have a VC fund and it's their first one, right? So they will have this conversation with their existing investors and they will have to raise more money. So in your opinion, what are the biggest lessons that you've learned, right? After fund one, right? And what do you think people should be saying when they meet their investors?
So the number one mistake that I see most venture investors making is they do not sit down and spend the time to do realistic portfolio construction math, which is to say, if I raise $10 million for my venture fund and I want to return a 5x net, how much money do I actually have to take out of the market in exit liquidity to actually generate that 5x net? So if you're charging 20% carry, you need to generate, low 60s millions of actual exit value before you can net 50 million back to your LPs and make them at 5x. And then the question is, okay, well, what kind of deals do I need to do to get to that level? What is my average check size? What is my entry valuation? How many shots on goal do I need? How long is it going to take me to deploy that money? Most people don't do that. And so it's basically like saying, I'm going to try and fly a plane somewhere, and I'm not even going to look at how much fuel I have. I'm just going to hope that I get there, which makes no sense at all. But in 2021 and 2022, no one was asking these questions
Hmm.
because everyone had so much FOMO. There was so much euphoria in the market that they thought, I just have to get into this fund. And so as a result, most of those funds are not panning out well. And the sad thing is, it ends up being the GP's fault, right? The investors look at the GP and say, well, yeah, maybe I should have asked this question, but at the end of the day, did you make me money or not? And if you didn't make me money, I'm not going to invest in your next fund. Sorry. I'm going to invest in the guys who did make me money, whether that's in TradFi venture, private equity, or just the NASDAQ or Bitcoin and not participate in venture at all. Fortunately, we did that. Both of our older vintage funds, our 2021 and 2022 vintage funds, our 2021 vintage is in the top decile of returns, and our 2022 vintage is the number one fund in terms of TVPI and DPI. So, and we did that. We were able to do that primarily because we did this math ahead of time and basically said, okay, like what are reasonable expectations? If you invest in a project that's a billion dollar valuation when you enter, you have to feel very confident that this thing is going to exit at 10 or 20 billion to be able to return the fund. Because a rule of thumb is each bet you make in an early stage venture fund, you want it to have the potential to return the fund. Otherwise, you're just wasting your money. And so, there are very, very few projects in crypto that ultimately go on to being worth 10 to 20 billion dollars after all of the investor tokens have vested. Sometimes they're worth that when they launch, but that's a big difference between what is my paper mark to market value versus my actual cash US dollar or Bitcoin value after the fact.
Yeah. For sure. And then, yeah, cash flow is the king, and very few projects have the capacity to scale, right? That much to actually generate that much returns and to support the price. We've seen some of the crazy, I don't want to put names to put people on the spot, but like, we've seen project that lost 90% of their value, billions of dollars wiped out in one day, right? So some blame it on tokenomics, some blame it on some other trade, like investors taking their profit, right? But then at the end of the day, same with the GP, as you mentioned, right? He's the ultimate CEO of the venture fund. The founders of the project are the ultimate responsible. Well, if you succeed, you're taking the like kind of lead. If you fail, you fail, right? Nobody cares how you fail, right? So, my question to you is probably, so you maybe you can talk a little bit about your investment thesis and what are you looking when you're constructing your portfolio, like, and maybe you can talk a little bit about like your existing portfolio, the biggest winners, like, and how did you find them?
Sure. So we are just beginning to invest our third venture fund. And we're really doing the same thing that we've done with our first two funds. It's a fairly small fund. We're making highly concentrated bets. We typically lead or co-lead seed rounds. We're really focused on entering at low valuations, and backing the best founders that we can find.
What is the top
Um,
valuation you would accept, if I may ask you directly?
well, we don't have a hard and fast rule. We're typically looking for things below 50 million FDV on the entry.
Hmm.
That being said, we do have some flexibility if we find something that we're really excited about with a phenomenal team that we think can be one of the outlier investments, then we will stretch on that. But generally speaking, we will not. Um, and that goes back to my discussion around portfolio construction. We've passed on quite a few deals that were higher valuation, that were very hyped, that traded up to huge multiples in the secondary market on fairly limited liquidity, but high multiples, launched at high valuations, and just have bled out, such that really, as an investor, you would have only made two or three times your money round trip. And for us, it just kind of goes to show you that if you're not in those types of projects at low valuations, even though it's a great logo and people are really hyped about it, the actual returns are not there.
Hmm.
And at the end of the day, we're not in business to get cool logos on our website or make friends with hyped up founders. We're here to make money.
That makes total sense. And Maybe you can talk a little bit about like, do you have like a particular investment thesis or you're chain agnostic, like industry agnostic, in terms of like sector agnostic, probably?
Yeah, so historically, most of our returns have been driven by infrastructure projects, L1s and L2s. Going forward, I still think that there will be opportunities for L1s, but they need to be very targeted. So we're thinking about Fund 3 in three main buckets. We'll invest some of the capital into new L1s and L2s that basically are along the lines of the things that we've done in the past. That's kind of our bread and butter down the fairway. We know those opportunities well. We know how to evaluate the founders. We have a strong view on how to support them, and we're going to continue doing that. The second bucket is a little bit newer. My view is that real fundamentals are going to matter on chain, meaning there will be businesses in crypto where they actually generate revenue and make money. I think the most interesting example today is Hyperliquid. The fact that they're generating substantial revenues on chain and then paying those back to the token holders. I think that model is going to become much more prevalent going forward. I think most of the liquid projects today that do that or have the potential to do that are overvalued, which is why it's more interesting to play that on the venture side because obviously we get in at a very low valuation. So I think there will be many more of those, especially as stablecoins take off. So we're interested in investing in that category, whereas, in the past we were less interested in that just because we felt that crypto was too early for people to be valuing things on fundamentals. And that's kind of turned out to be true, but I think we're in a transition period. We think about our fund 3, we'll be investing this over the next 3 to 5 years. It's a 10-year fund. So looking out into the future, pretty far and really trying to invest for those opportunities. And then the third is we think that there will be many more sort of ICO 2.0 opportunities, meaning that projects raise capital directly from the liquid markets and are, kind of liquid venture type opportunities where the project is building a something, but it's not built yet, but they launch a token and they raise capital that way, and the token is somewhat or entirely unlocked early. And it's really more of like a hybrid liquid venture bet. And we'll be making those types of investments in the fund as well.
And if I'm asked, what is your typical check size?
Average about 2 million.
Average, right? That's pretty good. So yeah, so you typically lead because seed round, that's not a lot of there's not a lot of room. And some people like raise only 2-3 million like in a total in seed, right? So
It's important in order for a portfolio construction to make sense, we have to have fairly high conviction bets like that and get significant ownership at the early stage. That's the only way for us to repeat the types of successes we've had in the past in terms of uh, fund multiple.
makes sense. And any other criteria for initial screening? Some funds are looking at the founder's experience, obviously, like, they want only like successful founders that already has previous experience. I don't know, some other tier one investors, which, it's interesting for me because it makes it like, very like the very narrow, like, in terms of like the projects that are actually can match those parameters. And then like in your case, at least you're infrastructure like, focused and but we talked about valuation and no crazy tokenomics or burn rates, but like in terms of tier one, are you focused on already project having those, or you don't really care and you can come out like as a first check?
We prefer to be the first check. I think when other larger funds are involved, typically it pushes up the valuation. Oftentimes, it also means that the narrative is already hot, which means you're late. We want to invest in things before the narrative picks up because that's how we're able to achieve those types of valuations. When it's a deal that everyone's looked at and everyone is passing around, that means that, there's really not much edge there. Typically, the valuation is already reflecting that.
That makes total sense. Any other criteria that like I would say like you would notice it and that will be like immediately like a green flag or vice versa. You would see immediately it's like it's a red flag and you just don't even touch it.
So I've been investing in early stage companies for 10 years now, just about. Um, and so I've met a lot of founders. I've seen things play out, not just first impressions, but watch companies go from seed to exit to, have one in my portfolio that's going to IPO soon. And which, obviously is extremely rare these days. And then also, on the crypto side, same thing. So I would say that we have an extremely high bar for our expectations of the founder. Um, I've seen great ideas flounder because the founder is just not up to par. And I've seen things where, the founder is literally able to just put the project on their back and make it a success despite, you know, significant headwinds, which every early stage company will face at one point or another. So the most important thing is, besides investing in something that has significant macro tailwinds, which crypto does, and the right economics, is backing the best possible founders who have the right, fit for the project that they're building.
Yeah, that's totally understandable. That's the only thing that probably drives any project, like, people who executed it. Maybe one or two examples of the projects. I mean, I'm sure it's like asking like your favorite baby, right? But one example of a project that you mentioned, like, either will IPO or you think it's already became a very noticeable success story that you can share and inspire my audience.
I'm not sure I really want to talk about that right now because I think a lot of alt tokens are kind of depressed. So it doesn't really look like some of these projects have been a success.
Mm-hmm.
I think it will look different in a few months. Obviously, alts are highly levered to Bitcoin, and Bitcoin is highly levered to global liquidity. And we've been in a trough the last couple of months, but I think as you can see, that's starting to turn around. So I'd rather just exclude that.
No worries. That's fair. If we can talk about the liquid side of your business, I know that um, you're like you're a very unique example of a fund that has both venture arm and like liquid investment, right? And you expose, you do it in a very smart way to manage the portfolio across different chains and like risk adjusted. So can you talk a little bit about what's your liquid strategy and how do you approach entering the position, exiting the position?
Sure. So we launched our liquid hedge fund in the summer of 2023. I seeded it with my own capital. I had accumulated crypto over the years and wanted to start managing it in-house with the view that a lot of our venture LPs would want to have their liquid crypto managed as well. And our view was, and still is, that the majority of liquid crypto managers are introducing too much idiosyncratic risk into their portfolio in an asset class that already has significant volatility as it is. So you don't need to add additional volatility into your liquid fund. After all, that's the reason why most LPs have only invested in crypto venture and haven't participated in liquid crypto because they don't like the monthly mark to market volatility. So they're choosing to basically receive lower net returns for illiquidity. There is actually an illiquidity premium as opposed to a liquidity premium in crypto because people just don't want to see the mark to market fluctuations. And so our view is that there is an opportunity to create a fund that actually essentially tracked the overall crypto market without adding too much additional volatility. And that's also what I wanted to do with my own money. The reason for that was I have the view that crypto is going to look a lot like the Nasdaq or the Mag 7 over the next 10 or 20 years, where the largest, most successful platform projects end up generating the majority of the returns on a dollar basis. And if you just capture that return stream, you're going to outperform the vast majority of all the alts and other asset classes in general. And so obviously Bitcoin has really proven that that is happening. I think in my view, Bitcoin is the most obvious macro that anyone can make probably in our lifetimes. And so we're heavily allocated to Bitcoin. We have historically been overweight Solana, underweight ETH. We've since exited both of those positions, but now we're starting to become more constructive on ETH. And another area that we've been more actively trading in have been memes over the last year and a half. And the reason being that, most alts we think are kind of broken in the sense that they're not really generating much fundamental traction, let alone revenues, but actual users using them. Meanwhile, they have substantial token unlocks from investors. There's a huge overhang from tokens that are going to be issued to the market. So you're essentially getting diluted by exit liquidity.
Mm-hmm.
And then you have memes, which have none of those issues. No one expects them to do anything other than be memes. They're entirely attention driven. You can enter at very low valuations. They have no, illiquid unlocks that you have to contend against. And so that generally has been a very good bet for us. We were early in some of the most popular memes last year, and this year have done quite well with them as well. We've recently added a lot to our meme exposure a few weeks ago, which ended up being perfect timing. But generally speaking, our alts exposure is something that we have periodically. We don't typically hold alts. In the right time and place, alts can uh, really generate a lot of alpha for the portfolio. But by and large, we expect them to bleed slowly against Bitcoin, and that's typically what happens. To be fair, every asset bleeds slowly against Bitcoin. So our general view is we want to be overweight Bitcoin almost always, except for extreme risk off periods, like we had in February. And then we want to periodically be long alts, especially memes, in periods like where we are right now, where we've troughed in global liquidity and it's starting to pick up, and we think we're going to have a couple months of very bullish activity, and so we want to capture that with alts.
Now, I'm with you on Bitcoin, Solana, and like other fundamentals, like I would say layer ones. I understand that this type of strategy. I'm a bit surprised, to be honest, like about the meme strategy, right? So how do you combine those like together, right? So for example, if an investor comes and say, okay, I want to deploy $1 million with your fund, right? So what is the typical like because it's a liquid fund, like what is a lockup, right? How long, like, can am I locked and when can I go out?
We typically don't have a lockup. We have some larger investors who ask for some concessions, and so we have lockups with them. But otherwise, it's monthly liquidity. If you
Monthly.
don't want to be invested with me, I don't want you to be. You can take your money.
But that's also makes it a little bit challenging, like especially when you're trading memes, because when there's a total systematic like black swan events like that are impacting, as you mentioned, Bitcoin, and then Bitcoin it's in return is impacting meme coins sometimes substantially. You can have like I don't know 40% drawdown in one day, right? So how do you rebalance your portfolio and how do you decide when I'm gonna like literally fix the 10x on the meme coins or whatever the amount you're looking into getting to? And yeah, so can you elaborate on this strategy because it's interesting.
Yeah, so we view investor liquidity separately from our portfolio construction in the liquid fund. If an investor wants to take their money out, even if we've realized a big mark to market loss, it's their money. They can do what they want. We may try and say, look, this is not a good time to do that. but we don't want to gate them from doing that.
Hmm.
And we haven't had any investors do that. I think because they kind of knew what to expect coming into this and thinking about it as a very long-term investment. Um, so in terms of our managing risk in memes, like I said, we don't just hold memes indefinitely, or alts for that matter. We are holding them very tactically. So we look at where we are in the cycle, where our entry valuation is, and what global liquidity is doing, and just the overall macro environment. What's the Fed doing? And basically looking at them as levered bets on Bitcoin. And Bitcoin is really a levered bet on global liquidity. So, understanding what they really are, someone might say, well, I'm betting on the bonk or with community or whatever. And yeah, there's an element of that that we integrate into our underwriting of specific opportunities, but the entire space trades more or less together and it's based on liquidity. So that's our macro overlay that determines whether we want to have that exposure or not. And then we have guardrails in terms of how we construct the portfolio in terms of what is our maximum entry weight, how much of the portfolio are we willing to risk when we enter the meme, and then what is the maximum portfolio exposure we're willing to have for something at any time. So let's say we invest 2% of the fund in something, it 5x's, now it's 10% of the fund, and then it does another 2x. Well, at that point, it would become 20% of the fund. We typically will not allow any alt to become such a large position in the fund. So what we'll be doing essentially is selling on the way up. We'll be trimming that position to manage our risk. Now, we could potentially generate higher returns by not doing that. But our experience is it's very hard to sell the top. There's a lot of idiosyncratic things that drive individual memes in their topping formations. So we're better off just taking our 5x and then trimming as we generate more returns. Because again, our view is if we can stack Bitcoin and increase the number of Bitcoin that we're holding in the fund, we're going to make a ton of money over the next couple decades. We
Hmm.
don't need to overthink it and try and maximize our return in any given month.
Love it. I mean, I think what was more important question, how do you even find those meme coins? Right now, there's thousands of meme coins being created, right? And the most successful one is like not easy to even spot.
Yeah, I mean, I guess we're too locked into the crypto ecosystem, but I would say that it's not that hard, actually. The market will show you what it prefers. You can see, you know, by looking at the charts, which coins are starting to perform, which ones are leading. For example, in the last few weeks, what's leading the breakout? What's lagging? What is volume relative to market cap? What's the attention around a specific token? What's the sentiment on Twitter? What are people talking about? What are people focused on? And so the best performers that we're seeing today, it was very obvious a few weeks ago that they were going to be the best performers.
Mm.
So things like Pepe, Bonk, Farcoin, Popcat, even Hype. Um, it's not that hard when you're looking at the right things.
So you're I would say you're still focusing the blue on the blue chips of the meme coins, right? You know, you're not going like completely like in low cap world.
I think that becomes much harder to pick. And
Mhm.
for us, there's still plenty of returns, at least from a depressed market environment. Farcoin was as low as 300 million market cap. If you think that it's going to exceed prior all-time highs of 2.5 billion, which I think it will, then that's a 10x. In my view, if you can underwrite a 10x in a few months in something that has very clear fundamentals, then that's a better bet than trying to pick a daily runner on pump.fun.
Mhm.
Um, and I think it's actually a worse risk adjusted return to go into the new lower market cap things. Plus, it's very hard to do those in size. Sometimes you can't invest even $100,000 in one of those coins, and so that ends up being a position that is not large enough to really matter for our fund.
Mm.
unless it does like 100x or something like that, which, in the past, we've obviously done that. We invested in WIF at around a cent and a half. So, we did over 100x there. Um, but
Wow.
as our fund grows and,
In
we
what, sorry,
become more sophisticated.
in what time frame when you mentioned 100x?
Well, we invested in WIF in mid-December 2023 at a cent and a half. And it was, over $4 in, I think it was late March of 2025. Excuse me, 2024. So that was, about 3.5 months.
And have you exited the entire position or you still kept part of it rolling?
We've exited the whole thing. Yeah, we sold on the way up, held most of it, and then sold towards the end of 2024,
That is
early 25.
that is phenomenal. Congrats.
Yeah, it was a nice win. We could have made more money, but like I said, it's very hard to sell the absolute top.
I think whoever is thinking about making more money in 100x, that's already borderline with a bit of greed. So,
That's what crypto does to you. I totally agree. But look, if you exit at 100x, but at one point it was trading at a 300x, then you look at yourself and say, yeah, we messed up. We could have done this better. So, it's just one of those things. Crypto is a very unique asset class. You see people making 100x on perps left and right, or at least pretending that they made 100x on perps. Who knows whether those returns are real, but you can see it in the charts how these things are possible. So, I think definitely there's some degree of psychological bias there and needing to manage your expectations and greed and risk certainly is a real thing. So I think you're right there, but that's why we've created some of our portfolio construction guardrails to help manage our psychology.
yeah. No, being disciplined, I think it's like as you mentioned, is the most important part. And there's a very few people in reality who actually reach the 100x level, right? Very, very few. I got lucky 5 times in my life to get to this level, right? And again, most of the bets were in 2021. Again, perfect timing, just like diversification, and then at some point you kind of like get there if you know what you're doing in terms of picking the good projects, right? Now, I think that's a very, very different skill set, as you mentioned, that people are getting to reach this level. Like most of the VCs don't get any 100x's. Like that I know for sure. So, at least at this market, right? So the temperature already like high. See, I get in. I'm getting very excited about this conversation. But let me ask you something more, I would say more stable. You mentioned about that you also are very bullish on stablecoin, right? And that will bring a new level of adoption. Can you elaborate on how you're looking at them and what do you think is going to happen to Tether and to Circle USDC?
Yeah, I think total stablecoin market cap today is somewhere around 200 billion,
250
with
something like that, yeah.
250. Yeah. I think that we could easily see that 10x in the next few years.
Mm-hmm.
Um, if you look at just, that's really not a very large number. I mean, the total market cap of some of the Mag 7 companies is higher than that. 2 trillion, 2.5 trillion. And if you think about the number of people in the world who would rather hold dollars than their local currency, it's almost every person outside of the US. There's 7 billion, 7, 8 billion people on Earth. Most of them would rather hold dollars than their local currency. If you think about fiat money, first of all of it is trash, including the dollar. It should only be worth the paper it's printed on. There's 190 global currencies. The US dollar is the best of them, but they're all trash.
Yeah.
And so if you if your local currency is constantly depreciating against the dollar, and stable coins are the first thing that has enabled these people to actually hold dollars, that is just a massive improvement in people's well-being. And so that will be people say tech adoption only occurs when you have a 10x improvement. Holding dollars as opposed to, the Turkish lira, or, some of these South American currencies or Southeast
Mhm.
Asian currencies, that's a 10x improvement. Now, I think Bitcoin is a 10x improvement over that once again, but I think, most people understand what US dollars are. Fewer people understand Bitcoin, but over time that will change. And so I think there's a huge amount of global demand. I think the US finally has gotten smart, and the Secretary of the Treasury, Bessent, actually has said this multiple times that he views stablecoins as being very important for
Mhm.
creating demand for treasury bills, which we need. We need more people around the world willing to buy treasury debt, considering how much debt the country has. And so finally, the US realizes that they want to incentivize stablecoin adoption globally because it helps actually continue to solidify dollar dominance, which again we need. And so I think that's a huge tailwind. And then even within the US and developed countries where they have better functioning, more stable currencies, there's going to be an incentive for day-to-day transactions to start using stablecoins. It's cheaper, you don't have to pay a bank. And now once there's actual stablecoin regulation, that's going to unlock that. And
Mhm.
people will start to trust what USDC or USDT means as it being truly like a dollar derivative, as opposed to something that kind of is uncertain what this thing actually is. And so I think in the next, again, 3 to 5 years, people will be able to use stablecoins for daily transactions like buying coffee and the like. And so I think that's going to easily help stablecoins go to the 2.5 trillion plus level, and all of that obviously has to happen on chain. And so I think that will pale in comparison to you know speculation. I think there's going to be a significant amount of on-chain usage just as a result of stablecoin transactions. So I'm very excited to see that happen. And then there's a spillover effect. Once people are active on chain because they're holding stablecoins, you start integrating stablecoins into traditional Web2 style apps, and they become Web3 hybrids just by default. And so I
Mhm.
think that's what leads us into what I said before: social gaming, etc. The Web3 vision will end up becoming enabled because of that stablecoin adoption.
100%. I cannot agree with you more. I think that will bring a huge value to the entire ecosystem, and we can 10x, as you mentioned, in the coming 3 to 4 years, probably, right? Maybe there are some other trends that people are overlooking and they're not noticing, and you being in so deep into the trenches of the crypto world, like, you clearly see them, like maybe another one or two like trends that are very important.
I think we covered some of the big ones. I think, people tend to be very philosophically opposed to meme coins
Mhm.
because they just can't wrap their head around the fact that, oh, this is a dog or this is a cat and it has no meaning or no use. I don't I don't care about that. I think people should leave their philosophical views out of it when they're thinking about investing, because really, like I said, memes are levered to Bitcoin and Bitcoin is levered to global liquidity. And the most obvious macro bet in our lifetimes is that the only way to get out of the level of debt that developed countries have is by printing more money. Like it's so obvious. The alternative is a depression and massive deflation, which the system just cannot withstand.
Hmm.
And the Fed and other central banks have already shown their hand. They printed out of the global financial crisis in 2008. They printed out of COVID. They printed out of the SVB bank collapse. They're printing right now just because the US is running such a massive deficit, which clearly I think, if you're paying attention, people were thinking, oh, Doge is going to help cut the deficit. Now, Musk is kind of stepping down from Doge. No one's talking about Doge anymore. People are saying that they only found 150 billion of savings, which is a drop in the bucket considering we're, running a 2 to 2.5 trillion dollar annual budget deficit. So, you know, as Lynn Alden says, nothing stops this train. And so Bitcoin is the most obvious bet there on a risk adjusted basis. Memes are a levered version of that. If you want to get leverage to that trade, memes are the only way to go. They're better than all the other alts. So instead of kind of poo-pooing them because they've got stupid names, just look at them as what they are, which is, the tip of the spear. And then, everything in crypto is kind of something in between.
Yeah.
Everything else.
No, that's that's an incredible summary. I want to ask you to conclude like a personal question. I don't notify my guests that I'm going to ask them this because that's why the answer is going to come out like the most genuine possible way.
Sure.
We do things for a reason. Every rational human being doing it for a very particular reason, whether consciously or subconsciously, you understand. So my question to you, Rennick, is what is the meaning of life to you?
I think you can answer that question on the collective basis and on an individual basis. So collectively, I think just the meaning of life is to procreate, to perpetuate the human race. Um, and I think individually, it's achieving some level of self-actualization and freedom. Whatever it is that enables you to use whatever skills or gifts that you have at the highest level, and to be able to do that on your own terms. That's kind of the meaning, or I guess the goal of life. And then using those abilities to help improve the lives of people around you. And that doesn't have to be, curing cancer or solving poverty. It could just be uplifting the people near you, your friends and family, and being a positive influence on them. Because if everyone in the world does that, then everyone is better off, and it's just as well. So yeah, maybe that's a simplistic answer, but I tend to think that the simple things are generally the most obvious and most impactful.
I think the most important is coming from your heart. So that's the most important part. Really appreciate all your knowledge, and I would love to have another round and talk more and learn from you. I think people really enjoyed your expertise. But if they want to find you, where is the best place? Are you more active on LinkedIn or Twitter?
I don't use LinkedIn. A goal of mine is to never go back on LinkedIn. So you can find me on Twitter. I don't post much, um, but you can always DM me, or I'm on Telegram. So yeah, you can find me in a couple of different places.
Perfect. Thank you so much, Rennick. Really appreciate your time, and I wish like everyone will think as positively about like the crypto and the meme coin economy like you, and hopefully you'll get more people who support your vision, and the fund will grow both liquid and VCR, right? And really appreciate your knowledge.
Thank you.